African economies are growing quite strongly as it is, but financial inclusion will allow many more people to enter the economy in a more meaningful way, become more productive, and certainly that will help to grow the economies in the future. So financial inclusion is really important because it will empower rural people, it will empower women, and especially it will empower poorer people, and therefore they'll become meaningful parts of these economies. Well, the most difficult part about financial inclusion is the cost that it takes to include someone who's in a rural area very far away from a banking branch. And building banking branches is very expensive. Banks across the continent and in developing countries as a whole have tried various methodologies. Agency banking or non-bank banking is one thing they've tried, but mobile banking is certainly the easiest way for them to access many customers in a simple way that doesn't cost them too much. So it's one way where they can grow their base. Just to give you an example, Diamond Bank with MTN Yellow tie-up are opening 10,000 accounts every single day, roughly. And that's something as simple as someone goes onto their mobile phone, they use the USSD codes, they type *710#. A few minutes later, they get an SMS with their account number. So literally 10,000 accounts are being opened every day at Diamond Bank for people who actually will never go into a banking branch to do that. Mobile money will be something that allows for better financial inclusion, and that obviously will help grow economies. So in general, it's a good thing. There are certain companies, in the case of Diamond Bank, for example, which has a retail focus. This now allows it to grow that focus. And for us as investors, we think that that's not built into the share price yet, and so we're investors in Diamond Bank. But there are definitely telcos that will benefit and so on and so forth. Of course, being an investor in equity markets, in our Ashburton Equity Opportunities Fund, we're always looking at what the price of the shares might be relative to what future growth in earnings they will see. We all know and have known for a long time that Africa has a shortfall in what it's spending on infrastructure. There are also a lot of investment into the economies in the industrial sector that need to take place. But what is interesting is that this year, EY in a recent survey have come up with numbers that show that this year should be the highest level of FDI into Africa ever, and surpassing their donor funding as well this year. So for the first time ever, we're seeing an enormous amount of investment in the continent. A lot of that will also happen in Egypt, where we've seen the GCC countries offering aid and assistance to Egypt as it comes out of its second revolution. And we expect that to be an enormous boost to the Egyptian economy, but specifically to companies that are focused on doing construction or supplying into the construction industry. So the Ashburton Equity Opportunities Fund is invested in companies like Al-Swedi Electric, which supplies electrical equipment. It also does turnkey projects, and especially in the power sector, as well as Rascom Construction, as well as Arabian Cement. So we really are focused on a lot of infrastructure development that's happening. Power is an important part of economies these days, with all the growth in communications and in telecommunications specifically. Power is a big necessity and a growing need for developing economies. We're also invested in an electricity distributor in Uganda called Umemi, for example. So the power sector is going to be an area that's going to grow enormously. A company we own in Nigeria, Seplat, provides gas into the power sector. So it's certainly one of the themes that is going to develop, and where we find value opportunities, we'll be investing in those. We travel across the continent a lot. We meet with many players in each economy, and by meeting with companies, their competitors, their suppliers, we get to understand the risks a lot better, so we can understand what risks companies are facing. At the same time, we know what we think those companies are worth, and by comparing that, we can do that. There's of course always currency risk, so we do take a currency view. but from time to time, if we're nervous about a currency, we'll invest in companies that have a natural hedge. So, for example, we're invested in Umeme in Uganda. Their revenue tariff is effectively in dollars, and therefore, in the near term, we don't have to worry too much about what happens to the Ugandan shilling.